Hi, I'm here with Luke today, who's the Senior Property Manager with Powell Property, and we're to discuss some of the challenges in the rental market. Luke, how are you today and how are you finding things?
Good, no, yeah, good. A lot of changes recently, all right, with regulation and all that. So we're trying to, keep landlords up to date and all with all the constant changes in regulation that are coming up in March. So we're getting a lot of questions at the moment, really, basically about the confusion of it, really. A lot of landlords are unsure what to do with properties that are going to be vacant, coming up vacant soon in March. A lot of them are unsure whether they should sell their property or not as well. And they're coming to us asking questions really of what's the best kind of course of action to go with.
Yeah, there's a lot of fear and uncertainty, and I think the government really at this stage have really interfered too much with the market. I believe there's 43,000 landlords after leaving.
Yeah.
And what I'm finding is they need to encourage people back in, and they need to have a landlord or a housing provider, I like to call it, to be part of the solution.
Yeah.
I know last week you had a call from a landlord that we deal with for maybe 10, 15 years. And I think it was maybe a 3-bed semi. Could you tell me a little bit about that conversation? And about
3-bed semi, it's a really nice house, but the landlord's been a good landlord. He's had good tenants, so he's very rarely raised the rent over the years. It's been at a steady rent of around 800 per month at the moment, so it's quite low for the market we have at the moment. He hasn't raised the rent because the tenants were good, but he's the one that's getting punished and kind of caught with rent pressure zones and caps on rent and not able to raise it.
Yeah.
Now with the regulations changing, they'll have a chance to reset it in a new tenancy going forward. But again, that tenant has been there for over 8 years.
But the likelihood as well of that tenant moving is very low.
Yeah.
So again, that landlord is circa 10 grand a year.
Yeah.
Take off your cost. The value of the property is probably 350 to 400.
Yeah.
And again, even if he enters into a new lease, he's tied in for 6 years.
Tied in for 6 years at the same rent, and again at a small raise in rent of 2% each year, which is not enough when it's you're only paying 800 a month.
Yeah.
So he's considering to sell the property, and the advice we'd give him would be to sell it because of the fact he's losing out on a lot of money over time, which is an unfortunate thing. He'd prefer to stay in the market, but there's no ways for him to continue on. The over-regulation by the government is really affecting small landlords and their choice to continue on renting.
And again, if you look at the figures there of 10 grand, take off your insurance, your costs, your taxation, you're probably in a negative yield position.
You would be,
so
definitely,
it makes no logic to proceed with that.
Not at all. And a lot of these smaller landlords as well would be, the rental properties are their income. They're paying off their mortgage for their own house. It's not, they don't have multiple properties all around. So it's a big effect on them when they're the ones being affected mostly by the regulation changes.
And I think a big problem is I can see the 1 and 2 beds being, I suppose they're coming back into the market. We can see, I believe you're taking on 10 properties in Langford Row recently, which is a regeneration program, but 1s and 2s. But I see a massive issue with the family home rental. So a lot of the time you would like the likes of Delford Drive and Rochestone, Frankfield would have had a lot of families renting at the kind of 15 to 1600 level. I can see the notice terminations more going at those houses, which is going to cause a massive issue with families, and it's going to add to the homeless issue.
Definitely.
That's a big concern of mine.
Without a doubt, because again, those properties are maybe under rented, under market value and all that as well, so the landlords have no choice but to sell. With the new properties we have coming up, like you said there, Langford Row, lovely, brilliant apartments, all 1 beds and 2 beds in the centre of the city. Very high quality make out in them and everything. But again, for the family, it's hard to move into a 1 bed or a 2 bed apartment. You'd rather have your family home in an area like Rochestown or Douglas or an estate, but they're getting far and few in between because of the fact that landlords are deciding to sell because again the regulations that are coming in have really pushed them out of the market.
And I just think from an investment point of view, if you went into a managed fund or you went into the stock market and you were told that you can't sell your investment for 6 years, you're just not going to invest.
No.
And again, back to that family home, like if you're looking at new developments, your 3 beds and 4 beds are hitting 450 to nearly 500,000 now in your new development. So people aren't going to be buying those. And I suppose why they're not going to buy it, because first of all, if they have to put any debt on it, and if they're even getting 2.5 grand a month, they're in a negative position. So there's no incentive. So either lower taxation or, you know, I think the combination of taxation and there's no viability for a person to bring that unit into the market. And I think that's a missed opportunity by the government. I think they've left families behind in this, and they really haven't thought about the avalanche what is coming. I can see it. I suppose I've been looking at this for 10 years and I've been seeing people exiting the market. Fortunately, our business has grown and I believe we're up to about 1,000 units. And obviously we advise our investors. We do a lot of portfolio reviews. So that's something you've been involved in, Luke, you know. So again, that's part of our system. And thank God our business has been growing, but I can definitely see a massive fall off in the individual properties, you know.
Yeah, that's true. I mean, another property you've taken on there recently would have been up in Old Market Lane, Blarney Street. That again, a building that used to be a pub downstairs and an upstairs building, but they've renovated into 2 one-bed apartments upstairs, and downstairs will be 5 ensuite bedrooms. Again, kind of targeting individual renters again rather than family renters, because there's lack of space, and also to, you know, maximise the amounts they want to get back in the rent. The landlords, this is the only option they have.
I think the only positive announcement they have made, I think, in the last 20 years, because there's been nothing positive for investors or buy-to-lets, is that when a tenant does vacate, you can reset the rent to market value. And this is welcomed, I suppose, isn't it?
It is welcomed, but very welcome for a lot of landlords. But again, like we spoke about previously, a lot of landlords are still stuck, and it's come a little bit too late for them because of the fact that you're on very low rent, and you're still stuck with a tenant that's paying that low rent, that is more than likely not going to leave if they're paying that amount. So they have no chance to reset the rent. So they're being forgotten about, these landlords that have been good to their tenants over time.
So Luke, let's talk about solutions. Like one idea, what I suggested and floated is, if a landlord stays in the market for 10 years, maybe a lower tax rate, because effectively the tenant is now getting a tax break, which I welcome. But again, if I up my rent by 200 or 300 euros, the net position to an investor is typically they're losing over 50%.
Yeah.
So even if they said to the investor that, look, if you stay in the market for 10 years, and obviously you have to register, so there's a record of it, and you have a tax return to do, maybe reduce the tax burden by 10%.
Yeah.
You know, I think they should be making all measures to keep people in the market, because that's part of the solution. And the more people leave, the more strain's going to be on the system. You know?
Oh, without a doubt, yeah. There needs to be incentive for landlords to stay in the market, of course.
Yeah.
There's not enough at the moment.
Yeah.
They're being pushed out massively by over-regulation. And the amount of people that are, you know, applying for properties on a daily basis with us, I see them coming in every day. We're talking hundreds of people coming in for a single property.
So what you're saying is that the demand is there, but there's no supply.
No supply.
So again, maybe on new developments, if they cut the VAT to zero and encourage someone in, but I think there has to be some sort of accelerated capital allowances, which would give some shelter against income, because the taxation is very unfair. Yeah. So if you look at a fund or you look at an ICAV, they pay little or no tax. But if you're in a company, you pay 25% trading tax. Sorry, 25% tax in rental. But if you're in a trading business, you're paying 12.5%. So if you're dealing with like a lot of the IPAS centres now are paying literally 12.5% trading tax. But if I'm housing families, I'm paying 25% tax through a company, which is very unfair and unjust, really. You know, because I think if you're providing a solution to housing, you should definitely be encouraged through better taxation and more incentives. And again, there's no cost to the government to do this. People do it out of their own savings. I think the savings at the moment I think the central bank recorded about 165 billion in cash savings in households. So again, if you had the typical landlord who was there before, who was a fair landlord, who was at 1 and 2 and 3 properties, encourage them to come back into the market, this would be a massive win for the rental market as well. It'd be a great win for the tenant as well. That they have, you know, again, and this will stabilise rents. Yeah.
You know? No, that's I fully agree with that. Alright, yeah, it definitely would. Because at this very moment of time, sometimes you go into Daft, you can see 52 properties available for rent in Cork City, which is hugely very, very low. Overall, with the amount of people who are coming in that are actually applying for properties at the moment, and a lot of good people are being missed as well because of the amount of people applying. you can't
Yeah.
get back to them all, you can't contact them all. So a lot of people are good tenants are being missed
Yeah.
out on as well on top of that for properties that are available.
You just can't house them.
Can't house them.
No,
There's
can't house them. We
areas
don't have the
for them.
stock. We don't have the supply.
Yeah.
You know, while we're getting some properties are being refurbished. You know, they did announce in the budget that they're upping the over the shop scheme or living in city scheme from 200 to 300.
Yeah.
But I you know, it's still not enough.
No,
you know,
right.
like I think on average, if you're doing an own door entrance with 5-6 apartments, your spend is up at 600,000-700,000.
Yeah.
You know, so again, you know, if you look at materials costs, labour costs, you know, even right now, I believe there was a figure out recently that I think your price per square foot is about €270 build cost,
Yeah.
and it's going up 50 cent every month. You know, which is
A huge cost.
you know,
Yeah.
and they haven't changed the goalposts,
No.
and I think they need to do that. Luke, thanks so much for sitting down today and informing our customers and landlords. It was a pleasure talking to you, and hopefully we'll have a couple more sit downs and chats in the future.
Yeah, no
Thanks so
problem.
much.